Welcome again, everyone. Today is Saturday the 15th. Everybody's on?
This is Denny. I'm here.
I hear Jim. I hear
Denny.
Dave?
Dave is here.
All right.
Grandpa.
Well, we had quite a week, and we're going to have quite a few weeks going forward. We had gold at 1360, bounced off the magical number, and had a massive amount of open interest on an unchanged day. How could that be? We'll get to that during the show. So, Denny, take it away.
All right, boss. Well, good afternoon, everyone, and thanks for joining yet another call with the boys. It seems like each and every week we just keep watching this explosion of events take place around the world, and each week it just seems to get louder and louder and louder. And just when we think it can't get any crazier, indeed, it just gets more crazy. So on the weekends, I really enjoy just sitting down and talking with Jim and Bill and Dave to get their perspectives on what the weekly noise that I've been listening to really means to our investments, to our families, and indeed to our country. This week, my mailbox was absolutely full of articles on everything from false flag events in the Middle East to interest rate forecasts in the Federal Reserve. On Friday, I actually tried to wake Bill up because I was watching gold make an early morning run towards 1360.
Good luck with that, Bubba. I'm on my horse by 7 o'clock.
Yeah, you were on your horse, and I know, but you didn't answer your phone, so I figured you were sleeping in. But, you know, today we're going to try to get it all in, so off we go. Bill, Friday morning, let's just talk about that. We saw gold once again get some skates, and it moved up pretty smartly, only to be hammered back down by the end of the trading day. Now, Bill, June is normally a quiet month for gold, and yet we're really seeing some fireworks of sorts here in June of all times. Any thoughts?
Well, it's you have to look at this from a global basis. If you look at gold in euro terms, in yen terms, in terms of almost any major currency other than dollars, gold has already broken out. From the 6-year man-made trading range, gold has broken out. The 13, I think the number is 1362.50 is the number that people are talking about for gold to break over. I have said you go through that level. If you get a 14 handle, in other words, 1400 or higher on gold, it's going to be gone. It's going to take off, and there's no telling how quickly it's going to happen, but at some point gold is going to go into, gold and silver are going to go into hiding, and you won't be able to buy it with fiat. So at this point, it's just a matter of time before gold does blow through the 1360, 1370 range and take off to and as Jim says, your first target really are the old highs at $1918 or $1,920. So it was an interesting day, not surprising at all. The open interest on COMEX was up. I think it was up like 14,000 contracts for the day. And in a real market, when the market's going up, the amount of open interest expands, and when the market's going down, the amount of open interest declines. And you can look at silver over the last few years. The heights of open interest have marked lows, which means the expansion of not volume, but the expansion of open interest has been shorts to open as opposed to longs to open.
It means it's been manipulated. That's what it means.
Yeah, absolutely. Bill. I mean, there's no ifs, ands, or buts about it. And I think, what is it? And I may be wrong about saying J.P. Morgan, but I think it's J.P. Morgan is now about to get slapped for their fourth time regarding manipulation in the gold market.
Jim, the central banks just look gobsmacked to me. For 50 years, they've had their interest rate cycles to control things, and having been in the construction industry, I just saw them as feast or famine. When the rates went up, it was famine. When the rates went down, it was feast. But this time, I really and truly think that they're just out of ammunition. I think they wanted to get rates up to about 5% or so just to get ready for another recession or a depression, but they got stopped in their tracks with truly an ailing economy. Now there's talk of anywhere from 0.25% to 0.75% rate cut. Jim, what are you thinking? What are your thoughts on this?
You got to press the talk button. The first place is the Fed doesn't make the rates, okay? The Fed is not a leader. The Fed is a follower. The Fed is not a doer. The Fed is a talker. And the motivation behind most all of the talk has some political or a lot of political power in it. We're coming into 2020. Our present president really does need to be able to continue to brag about this unique economy, supposedly, that exists here, the only one in the world which is rising. The statistics are starting to come out a little bit contrary to that, or somebody who in the Bureau for Labor Statistics has finally come clean on how they fudge it. And what it really is, I fall back to Mr. Williams, who I think, in terms of his studies, not that they're to be looked at as absolutes. They would be absolutes if we were in 1970. But you can't have a trend where his figures are contracting violently, while the figures officially are expanding mightily. Just total contradiction in terms. So the first thing you need to know is Fed follows. Fed does not make rates. Fed follows. And you've seen that in the market. I mean, look at last week as a for instance. The direction of rates are lower for real reasons. And they never could have gotten them significantly higher unless somebody on the Fed really believed that unemployment for all races, kinds, creeds, and color, in fact, we're at the lowest levels ever in the history of man. It's not true. It's simply not true. Rates will fall because of the environmental business conditions. Then comes into focus what Bill has been speaking about now for many years, but especially this year, the mathematical impossibility to repay the debt. So we are in what we've been looking for. It began this month. We have between 4 and 5 years of this experience ahead of us, during which there'll be 2 resets, one manufactured and the other created by the true forces and laws of economics. I'd almost say file away the Fed. It's all just as much garbage as you hear on the mainstream media. And think for yourself, the figures are not going to tell me what's going on in the world. The rates are going to tell me. Okay? And I remember 3.25. Boy, that certainly went away fast on 10-year. So what the market said is, boom, not happening. Go away. What you're hearing coming out of the Fed is nothing more than jawboning, talk, or total stupidity. Take your choice. That's what I say.
Dave, this week we saw the Norwegian oil tanker and a Japanese oil tanker attacked by somebody in the Gulf. At the same time, Abe is in Iran talking. Crews were evacuated. Some said they're being held by the Iranians, and the ships are ablaze. So oil shoots up pretty quickly on this news. Now, honest to goodness, as soon as I saw this, what I think is a false flag, but I don't know, Dave, I honestly said, I wonder what Dave's thinking about this. So fire away, Roscoe. Tell me what you think took place there in the Gulf.
All right. Well, okay, let's just start at the top. Now, Shino Abe was visiting Iran, and he was there, for lack of a better word, on a peace mission, he had talked to Donald Trump earlier, and they were trying to tamp down the rhetoric. So Abe goes over there, and while he's there, Iran would be out of their mind to attack a ship that has partial Japanese backing. So I looked at this and I said, let's look for motive. All right, Iran doesn't have motive to do this at this particular time, because if they wanted to do it, you wouldn't do it when Abe was there, because it's insulting your guest. So, all right, so let's rule out just for a moment Iran. You could rule out China, because China has nothing to gain by doing it. You could rule Russia out, because that's the last thing they would want to do. Now you have to go to, well, who has a motive to do it? And then not only who has the motive, who has the technology? Well, that comes down to either the deep state or Mossad. And the deep state and the Mossad are probably one and the same. But Israel was, again, in my opinion, heavily involved in 9/11, the whole planning of it to start this never-ending war on terror. They have been trying to get the United States to do their dirty work with Iran since records have been kept. So now here we are, and I watch this event, and I say to myself, motive. Israel has the best motive. Saudi Arabia does also, but I don't think they possess the technical ability to do it. And then you have to look at the ships, and they said, well, the United States put out this grainy video that any hack could have photoshopped. It doesn't clearly show anything, but they said that there were mines attached. There was a mine attached to the boat. Well, we sat around for hours, the United States, hours, with this alleged mine attached to the boat still before we filmed Iran go in and remove this mine. Well, the problem is even the guy who owns the ship said, that's not what happened. Those holes are well above the waterline, and the crew on it said that they saw flying objects, i.e. most likely missiles, coming in and hitting the sides of the boat. So when you look at this whole scenario, it fits perfectly with what Wesley Clark said years ago, that the agenda was set, and Iran was in the crosshairs, and it's yet to be dealt with, and we're to the point where now we're dealing with it. And the real problem I have with it is, one, the United States public feels that this stuff goes on and it doesn't affect them. I believe that nature has a way of balancing itself. And when I say it has a way of balancing itself, we as citizens bear responsibility for what our country does. And if we go in and try and destroy another country, then I feel bad, because there's a lot of people in Iran I don't know, I don't hate. I may not like some things about the rulers, but I don't want to see innocent people get blown to smithereens like we did in Iraq, like we did in Libya, like we're still doing in Afghanistan. So I see what I clearly believe is a false flag, and my blood pressure goes through the roof, because Americans go about their day like, oh, yeah, whatever, no big deal. It's not going to affect me anyway. We may just bomb the hell out of them over there, and, we could make like McCain, bomb Iran, bomb Iran. The story doesn't change, and unfortunately, that's why we're in gold. Really, the reason we're in gold is because the United States is a declining empire, and we strongly suspect that at some time a financial crisis is going to take place, which is going to cause the United States dollar to lose its purchasing power, and the only thing that's going to survive is gold and silver. So, when I watched these events, you obviously could tell by the emails I sent you, Denny, my blood pressure was going through the roof.
Dave, you did a nice job explaining that. Thank you. I knew it was a false flag, and I think a lot of Americans did, but we didn't know who the rascals were that were behind it. So nice job putting that in perspective. The only
thing we didn't see on that grainy video was the word Iran on the back of their jackets.
All right, Bill, since you're talking, it looks to me like everybody except the consumer wants the price of oil to go up. And that would include Wall Street, bankers who've loaned over $1 trillion to the oil industry and the frackers. And everybody seems to want the price of oil to go up to salvage their own balance sheets. And I could almost hear the sigh of relief this week when those tankers were hit and the price of crude jumped almost immediately. So the question to me is, and really to you, Bill, is what's the real situation with oil? There's always this argument that we've gone past peak oil, but the price is so low. So it literally takes a terrorist event or a false flag of provocation to get the price to pop up. What are your thoughts about oil, Bill?
Well, the lower pricing of oil is reflecting less activity, less economic activity. Oil going up versus down, there's two sides to it. If you go back to the 1980s, 1982, 3, 4, and then really hit the bottom in 86 or thereabouts, that worked out well because it did act as a boost to the economy. It acted as a boost because oil prices were lower, people spent less on gas, it cost less to transport, et cetera, et cetera. But back then, there was not all this leverage that's currently in the oil industry. So back then, when it was basically decided to knock the price of oil down, there was no threat to taking the financial system down because there was not the concentrated debt that there is today. Today, these low oil prices, you've got a very direct threat of the fracking industry going down. They can't turn a profit under $70. And the problem is, who lent all that money? Well, it's the banking system. So it's the financial system. It's a push-pull thing where, on one hand, it feels good. Lower oil prices, it's good for the consumer, but it's bad for the financial industry. And then on the other hand, when prices go up, that's going to slow the economy even further, but it will, if you want to call it, collateralize the financial system.
Jim, this week I went back to one of my old English courses in Greek mythology, and forgive me, but I remembered the myth of Cassandra. Cassandra was one of the goddesses that Apollo fell in love with, and he granted her the gift of prophecy. But then when Cassandra rejected him romantically, he placed a curse on her so that no one would believe her words or her predictions. She was always right, but nobody seemed to pay attention to her. So here's where I'm going with this. Real stuff, land, oil, gold, collectibles. Pretty soon the whole world is going to figure out that there are more stable things to invest in than paper. Gold gets its legs, and then it gets them cut off, and then the tide seems to be turning, and then week after week the news is better and better for gold, and then, boom, it goes the other way. It's a hard asset, but generally speaking, the public just hasn't noticed. So, Jim, you're my Cassandra. You're telling the truth. You can see the future, but it doesn't seem to be that anybody is listening. What's it going to take for them to recognize gold, Jim?
Hit your button, Jim.
For them to recognize the gold is to recognize what really fundamentally the manipulation of the gold market has been for. And that's a big bite because that takes a brain and a half. But keeping the price of gold at these levels will make the first reset palatable and not require the price of gold to exceed, I would say, somewhere in the $3,300 to $3,500 area. Because it will look like a order of magnitude of great significance, however that gold is handled, whether or not whether or not it decorates a cryptocurrency that can only be traded by central banks, or whatever other form the first reset takes. So I find that the willingness to cooperate with the price of gold is not so much a desire to protect the dollar now as it is to get the field ready, plant the field for the crop of the first reset. And there is no public there is no retail in gold. There is no public in gold, but there certainly is a professional interest. And the professional interest is what will benefit the most, as they always did, as they did in the late 1970s and early 1980s. And just those that we consider to be the most evil of the doers are the biggest players on the long side when the time comes, and the time has come. The 350 level now has been hit so many times I've lost count. That formation, that box going sideways, which is now one of the most handsome rounding bottoms, one of the best teacups I've ever seen, longest term, huge, says only one thing: the old high, minimum. And there isn't a technician on earth that can argue with that without revealing themselves as purely prejudiced and a total fool. So my answer to you is it is being artificially maintained at a modest level in order to make the first reset and the use of gold in the first reset look like a tremendous increase in terms of orders of magnitude, meaning multipliers. However, reality is what Bill says. There is not enough money. There's not enough cash to pay off the debt. They got to create it on computers. There simply isn't enough printed money at the present time to pay off debt. If we take Argentina and some of the African countries out of it, we have to have a new system. We have to print more paper a different way. And gold will have very much to do with that. In truth, gold will save for the powers that be some purpose in time, some amount of time. Eventually, it replaces and rescues the system. The price of gold is held down not to depress the stocks, not to make a profit on the short side. Just as the policy of Russia and China is to accumulate, the policy of the West is to make sure that when they do make the change, that the change appears to be extraordinary and therefore meaningful. That's my take on it.
Wow, that is not what I was expecting. So it's in preparation to the first of the resets. Interesting.
100% what I would do if I was in charge of being a bum.
Hey, Dave, I know you're not a fan of the president, and I think you know that I am a fan of the president. But over the last couple years, he's been rather quietly making a lot of bilateral deals with countries that could replace the trade we've been doing with China. He's done these one-on-one deals with individual countries like Vietnam, South Korea, Thailand, the Philippines, and there's a lot of others that are in place now. And now he's starting to put pressure on China for a better trade deal. China's economy is not doing that well, and it really does look to me like he's played this whole scheme or this gambit pretty well in the negotiations. But give me your thoughts. What do you think? Is the president still in a strong position with China, or has he overplayed that hand?
My feeling is he's overplayed his hand. And, the countries you're talking about, that we've signed deals with, their economies are so small, and they have no ability to do anything for us. And when I say to do anything for us, Vietnam, last I remembered, that was the country that we false flagged and invaded. The Philippines, my father was in the Philippines at the end of World War II. So I look at these countries and I look at them and, for lack of a better word, they're little hodunk countries. Their economies are so small, their GDPs are so small. Even if they turned around and bought everything they possibly can from the United States, it can't replace China. You're in the farm belt. Soybeans. What's happening with soybeans right now? What are farmers doing? They're choking on them, are they not?
Well, yeah, they can't get the crop in, so they're actually on last year's crop. But your point's well taken there. There's a 1.2 billion, 1.3 billion people there. That's a whole lot of soybeans that get consumed. If you took all the countries you rattled off, I don't think you can get to 100 million people at best.
So, my thinking is it's like, for lack of, and I don't want this to be taken the wrong way, it's like inviting the ugly girl to the prom and saying, see, I got a date. Well, big deal. The beauty queens have all turned you down. Germany, France. And he's over there trying to, belly up England. For lack of a better word, what does England really do? If you took away London, what really goes on in England? What is the real economy in England? France, Germany, all Italy, Spain, Portugal, all the European countries. Poland's our friend all of a sudden because Poland wants a military base. Well, great. Poland's a great trading partner.
No, we want a military base.
Well, exactly. But, so we're to the point where I think we've painted ourselves into a corner. We've been doing it for years, and I don't solely blame Donald for this. The United States has been painting itself in a corner for years. I'm of the mind that it's being done on purpose. Go back to 1913. It's always been the plan. They wanted to destroy the country. And when I say they, whoever set up the Federal Reserve, and people could look it up, figure it out for themselves, had a plan to destroy the country. They have indebted every American to the eyeballs. And if the dollar was to collapse here, the United States citizens are buried. They own houses that are worth way more than they're really worth. They own cars, $58,000, $60,000 for a pickup truck. Whoever heard of such nonsense? The reason it happened is because the Federal Reserve allowed people to gorge themselves with cheap debt. Oh, look, that $60,000 pickup truck is only $600 a month. And when your money dries up or the currency gets devalued, you're going to be sitting on a $60,000 pickup truck that isn't really worth $6,000. So, I believe we've painted ourselves into the corner. I don't solely hold Donald responsible for it. He just happens to be on the deck of the Titanic screaming, "I'm the captain," when it's hitting the iceberg.
Bill, we talk about this great reset of all time. Jim sort of gave us some foreshadowing here, and he speaks in terms of the Jubilee in the Bible. I think it was 3 shows ago we were talking about the 7 years of 49th year and Jubilee when everything is reset. So when I hear reset, I think total currency collapse in virtually every country. When I hear currency collapse, I think of hard assets like land and gold and silver, collectibles. And when I hear currency collapse, I also think of the banks closing and the terrible economic times. But, Bill, the question is, what should investors be thinking about when they hear the term economic reset?
Well, those are both one and the same. A credit collapse and a currency collapse they're joined at the hip. Currencies have value and are created by the credit markets themselves. As far as what investors should think is just think paper versus real assets. If you can hold something in your hand, if you can own something outright, and let me preface the holding something outright, a piece of property, and I've had people tell me this, oh, well, I'm just going to buy a piece of property without any debt, so I've got a hard asset and I'm all set. Well, the problem with that is it can be taxed away, and real estate is valued where it is valued right now because of free and easy credit. So just because you paid cash for it, you're paying cash into a market, you're competing with other buyers that have bid the prices up via the use of credit. So I think the biggest thing about reset is all asset prices are going to be reset. And a cup of coffee is an asset. IBM stock is an asset. Real estate is an asset. Gold is an asset. So everything is going to be reset against, ultimately, and I'm talking about the Mother Nature reset here. I'm not talking about the man-made reset. Everything is going to be revalued where supply and demand actually determines the price. And that's not the way it is now, because Everything has been artificially, if you want to call it, bastardized by the use of credit.
Jim, following up on that, what Bill said about the economic reset, anybody who lived during or just after the Great Depression, which includes many of my family members, they just have never really trusted banks. And it might be assumed that nobody trusts Western banks, and a lot of folks in the West absolutely don't trust the Chinese banks. But, Jim, are there any banks out there that everybody or that everyday citizens could trust? Are there any banks that we can put a little faith in?
No, there are not, because of the law.
The bank of you, Denny.
Money in a bank is not your money anymore. When you make a deposit in a bank, you become an unsecured creditor to the bank equal to your deposit. The definition of an unsecured creditor is that you have no call on any assets that the bank has. If after liquidation there happens to be some assets left over, which there won't be, then you have a call on that. But when in a banking crisis have you seen assets left over, even if the entities are merged, whatever is in there is merged out of there. And the merged incorporation is a very small percentage of what's left. So the answer is no, it is not. There is no safe bank. There are good banks. There's local banks in Texas and Omaha and Nebraska and Wyoming and maybe even New York, where there are good people running the banks trying to do a good business, but there's the law. And the law states, without any question, the minute you make that deposit, it's no longer an asset to you. You have converted it into a debt instrument. And the debt instrument is the lousiest debt instrument that exists in the whole spectrum of debt, an unsecured loan. So the answer, my answer is simple. I mean, I shouted from the street corners. There is only one savings account, precious metals. Use it. You need something, you sell the coin. You don't. You get a good turn in something or another. You sell a piece of real estate or whatever increases your assets. You make further deposits. You don't give a darn at these levels what the price of gold is, because that's the only savings account that exists in which your asset remains your asset. It's the only savings account that exists that if you handled it properly, as one should in gold, it never tells anybody. It is the only secret bank left in the world. It is your central bank. And safety deposit boxes are the greatest oxymoron ever presented. Safety deposit boxes are donation boxes. Just like when they come in church with the little, I don't know if they do it anymore, but they used to pass the basket. That is what putting money in the bank is. You put money, you make a donation to the charity. The charity is called the retirement accounts of the executives. Anybody who thinks because they have a nice fat bank account that they're in good shape, a nice fat retirement account, a nice fat equity account, a business in luxury items, which is having a good cash flow, and you go down the whole line, don't have anything. I use gold as a savings account. I don't just talk. I do what I say. If I need something, I sell some gold. And the minute I got my money back, then I buy that gold right back, and I don't even ask price. Okay? I give a call to Bill, buy it back. If I got to sell it because I want something or need something, hey, sell it. And so far I've been lucky. When I needed something, it's been relatively high, and they've hammered it when I got it back, but that isn't brains, that's pure luck. But do recognize that we're not kidding here. We don't need meds to put a false smile on our face. What we're talking about is hard, logical reality, not a Potemkin, Paper City, or General Patton on D-Day protecting tanks that were balloons, like the things they have on the Macy Day Parade. Oh, he was angry. what you see out there, what's being reported out there, I'm sorry, it's not real. Fabrication now is a virtue. This world has been turned upside down, where real has become unreal and unreal is considered real. Where virtue has become sin and sin has become virtue. Where doing business now has the greatest caveat emptor, the buyer beware, that ever has existed before, regardless of the so-called guarantees, especially in finance. Finance has modified itself to bottom feeders looking to do damage without taking risk. Gold is your answer. Gold is the bank you can trust. There is no other answer,
Denny,
unless you use the word silver.
Let me add to that. Let's take your local bank that does no business whatsoever in derivatives. They've got a clean balance sheet, et cetera, et cetera. But that balance sheet, remember, is made up of what? It's made up of credit. It's made up of credits bought like U.S. Treasuries, investment-grade corporate bonds. When the credit system comes down, the banks come down no matter how clean they are. All banks come down.
I remember there doesn't seem to be any consequence to bad loans anymore. Many of you probably are old enough to remember the Mexican banking crisis, where the New York banks, because they got a higher interest rate, which more points made their balance sheet and everything look good, they were loaning to Mexico. And then all of a sudden, Mexico did the Tijuana two-step and said, we're not going to pay you back. I don't believe that there has been a consequence to bad loans for at least a dozen years now, and the banks do not have any consequence to bad decisions. I mean, because the Federal Reserve or somebody always steps up. So you're probably right, Bill, in that if one of them's bad just by association, the rest of them are going to end up being bad too.
Well, there will be consequences this time. There weren't consequences in the past because of, if you want to call it, socialism for the banking system, socialism for the elites. There will be consequences this time because all over the world, bail-ins have been written into banking rules. As opposed
since
to
Cyprus,
bailouts.
You're right. Cyprus was the test bank, and by golly, they pulled it off.
How about coming to a conclusion? Banks are for checking accounts. Gold, silver is for your savings account.
Exactly.
Perfect.
End of discussion.
Perfect. Dave, I know all of us on this call are gold watchers, Dave, and from a casual look at the charts, it appears that gold is just getting stronger. In a part of the chart, you move points back to a couple of events, and here's what I'd like to ask you. It seems to appear to me that the Sochi summit in Russia that was a while back, the Russians essentially told Pompeo to go jump in the lake. They can put all the sanctions they want on, but they figured out how to get around them. So they basically told Pompeo, buzz off. And at exactly the same time, it looked to me like the Chinese Politburo told Xi Jinping to stand down. In other words, he was trying to accommodate Trump. It looked like they were going to come to a conclusion. And then the Politburo, they get involved and they say, Xi, that's enough of that. No more accommodation. Now, Dave, both of those things happened almost simultaneously, and both of them seemed to get a reaction from gold. I think something's going on here, Dave. I really and truly think that world events are now lining up for gold. Have you got any thoughts on that, Dave?
Well, we have geopolitical problems around the world. And when I say we, every country right now is having problems. All right, so China obviously has their share of problems. Their economy is slowing down. Russia seems to be the only country that is really not feeling the downturn effects as much as we keep trying to make them out to be a loser country.
And why is that, David?
Well, because they got rid of all their U.S. dollar reserves and bought all the gold they can get their hands on and continue to do.
Because their debt ratio is 14% to GDP. That's why.
Cool. Well, so if you go down the list, Germany's not, things aren't going swell there. France, things obviously aren't going well there, although you would never know it because we can't hear anything about the yellow vest protests in this country. All week long, all we heard about was the Hong Kong protests, and God forbid the Hong Kong police were using tear gas to try and, tamp down the riots. This went on for 30 weeks in France. If you live in the United States, unless you go to alternative media, you wouldn't even know the yellow vest protests are going on. I think that what you're seeing is a reaction to the fact that people are starting to get nervous. And every time gold tries to climb, the plunge protection team, the president's working group on markets, spanks it, just like you said the other day. Gold's the only thing that breaks out, only to get spanked back down. The Dow every day breaks out. Bad news goes up. Good news goes up. Any news, it goes up. Doesn't matter what happens. The Dow has to go up because that's how they keep the citizens of this country dumbed down. I had a good buddy of mine who's got a fairly decent 401k into the seven figures say to me, I'm up 18% last year. I didn't have the heart to tell him that you can go down 80% faster than you went up 18%. But, again, the government knows this. They know how to lead the public. They watch social media. They watch people's emotions. So, that's what I think you're seeing in gold. Obviously, it's not mom and pa who's driving the price of gold. It's going to be foreign countries stepping up and buying large volumes to the point where COMEX is going to become irrelevant, like Jim has been saying all along. And that's really when you're going to see gold move. And as Jim and Bill have said for years, when it happens, it is going to happen at lightning speed, and it's going to lock the public out of the market. Gold goes to 2,700. Who wants to step in and buy? Buy it at 2,700, watch it go to 2,100 before it goes to 3,500 like Jim's talking about. The public can't deal with that volatility. It'll drive them crazy. So, yes, I think you're right. I think you're starting to smell gold moving higher. As Jim said, we have been in this box pattern forever. And when that upper boundary breaks, and they know it, when it breaks, it's going to break hard.
Hey, Bill, I live in the Midwest, you know that, and the farmers are getting killed right now. I think literally every weekend since January it has either snowed or rained. And late planting, because of these heavy rains and flooding, have just really killed our farmers. I've watched corn in the last 40 days go from $3.60 to $4.60. I've watched beans go from about $8 a bushel to $9 a bushel. And yet, from the farmer's standpoint, all of their materials and equipment have continued to skyrocket in price. And even with beans up and corn up, because of the flood situation, I'm not sure there's enough meat on the bones left to turn a profit because of the fertilizer prices. When oil goes up, fertilizer prices go up, and fuel prices go up, and equipment prices are all up. What's going to happen? This is a major industry for America. What's going to happen to our farmers this year, Bill? You got any thoughts?
Well, the problem is, you could have $20 beans, but if you don't have any beans in the ground, what difference does it make? And I think that's a big problem right there. I think you're going to see more consolidation. I think you'll see more family-owned farms fail and be gobbled up by, the few huge corporate operations.
You're so right, Bill. And the quality of food goes in the opposite direction of cargo.
Here in the Midwest, we've got ADM, Archer's Daniel Midland, and they are the conglomerate. They're the 400-pound gorilla in any way. But, Jim, since you're talking, I've been saving this question. I almost got it in last week, and we got a little bit behind. But in the late 1800s and early 1900s, there were a lot of mining companies out west that opened mines for gold and silver and copper and a variety of metals. there was a lot of guesswork as to where to dig, and it was whether they were witching or they didn't have any scientific methods on where to open a mine. And it took a lot of money to do that, so they sold stock to investors. They sold mining stock. So now fast forward to the mining industry of the day. The shares are sold to investors each and every day, but the technology is so incredibly different what's beneath the surface. As investors, we now have access to drilling reports or 43101s to tell us what's possibly down there. Jim, if we're investing in mines, and I believe it's a very valid investment to go with a gold mine, what should we be looking for, Jim?
Well, high tech now in mining is mind-boggling, okay? When I tell you I know what's down there, it's not that's not a promotional statement. It's a scientific fact. Oh, you may not know what's down 3,000 when you're only down 500. But as you go further and further, using electromagnetic testing downhole, when you send cameras downhole that are really GPSs to make sure your drills are going exactly where you want them to go, or you can even change direction. There are no more exploration companies because they simply can't afford it. The technology is a good news and the bad news. The good news is that those who have been able to utilize it will be the few that have the best, or they would just stop. 2,000 exploration companies have disappeared in Canada in the last 4 years because they can't afford the cost of real exploration. There are not that many known huge deposits of gold. The biggest deposits of gold are in what's called the Greenstone Belt. And that exists in the United States and it exists in Africa and elsewhere. But they are limited by their nature, how they were created, okay, how the magma flow took place to certain areas where the criteria is depth, and where the criteria is the lower you go, the wider it gets, the richer it gets. Lower, wider, richer. And in order to do that, you've got to take what we used to do on the surface and do it underground. You have to, the idea that a water witch may find you water, or somebody with some good mine finder might get something a little bit deeper than an outcrop. Yeah, sure. But what does it mean? How far down does it go? Don't get yourself wildly excited about surface gold. It's what's down there that meets those three criteria that I just mentioned. There is not that much of that around. And extra we don't know about Antarctica and other places which are popping out of the ice, there isn't much. And to get a mine started is a good 8 years. And anybody who does it faster than 8 years, pretty much a miracle. So if all of a sudden a great deposit was to turn up, don't expect to see an ounce out of it for 8 years if it is a great, deep deposit. So the gold mining industry has turned into a very selective but terribly with a tremendous potential amongst a very few. And that's not what makes for retail. Retail is what brokers want, a lot of something to sell to a lot of people. And, of course, we've had anti-gold propaganda, which is, it's taken its toll. But what I just told you is the truth of what's out there. And they are in the greenstone belts around the world. The industry knows who they are. Wider, deeper, richer. Without that, your gold mine is mom and pa.
I'm going to get that on a T-shirt. Wider, deeper, richer.
That's the whole deal.
Hey, Dave, me and you could get Charm School twins on the back of our T-shirts.
Explain to them. I called you. I said I was going to take my lunch money, save it up, and send Dave and Bill to Charm School, and now they won't let me forget it. So.
Well, that's the end.
Yeah.
You said we had graduated from the Charm School.
They wouldn't take me.
And my reply was
a 4-letter word and up yours.
No,
yeah, I've heard that myself on occasion.
I just explained to you that I was an upperclassman to Dave in Charm School because I'm a little bit more polished.
No, what you explained to me.
You
explained to me. You explained to me that my mother and father were not married at the time of my birth. That's what you explained to me.
Man, you're
David, I want to talk to Dave about public pensions. I remember listening to you, Dave, talking to either a friend of yours or somebody who was close to you that had a public pension. And I'm looking at these promises that have been made to pensioners, Dave, and they look absolutely gigantic on these balance sheets, and the set-asides the governments have on their balance sheets to fund them is minuscule. In many cases, less than half of the obligation to pensioners has been set aside, and indeed a very high percentage of pensions paid are coming out of tax receipts. Now, in the private sector, we can look at a 5,500 and tell them, whether they're 85% funded or whatever, but when I'm looking at these public pensions, it looks to me for an absolute explosion if tax payments are slowed in any way. Dave, it doesn't look like this is going to end well for people who are police, fire, teacher, government, any type of those work pensions. Dave, it's starting to look ugly.
Well, it is ugly, and nobody wants to look at it because it's ugly, and nobody wants to admit that they've been conned. But conned they have been because the money simply is not there to pay it. It's like the big article in the New York Times this week. I was going to send it to Jim, but he knows the story, about how Social Security is running out of money, and now they're going to have to tap the principal. Wow, look, really surprised. Nobody ever figured that out. We've been talking about this for years now. Our whole pension system in this country was designed by the same people who did Bernie Madoff. It's a Bernie Madoff program. They're using new people's money to pay old people's money. And sooner or later, the new people are going to say, wait a minute, I'm getting robbed. Because the old people are going to realize that they've been shut off and there's no new money coming to them. I believe that we're going to watch a complete collapse of the public pension system in this country and look no further than Illinois. How does Illinois going to pay all their state and city employees? I just don't see how it happens.
The teachers' pensions, Dave, teachers' pensions in Illinois are the best in America. They have no Social Security, so they took all the Social Security numbers that they should have paid for the teachers and put it into their plan. Absolute escalators built into it, and many teachers are making more in retirement than they ever made as teachers. It's a recipe for disaster. In fact, Bill, I remember you getting in a fight with a retired police officer in Texas there once, and was it at the stable you told me that story happened when you said, what's going to happen when your pension's gone?
Yeah, and when you talk to people about their retirement plan, you are an absolute nut job. It could never happen because, it's guaranteed by the state, or it's guaranteed by this, or it's guaranteed by that. To try to talk to somebody about reality, they just stick their head in the sand.
Yeah. Bill, while you're talking, this is the last question I have for you, buddy, but debt is an economic multiplier.
I'm not telling you whether boxers or briefs, so don't go there.
Charm School. Debt is an economic multiplier, and central banks and governments would prefer that you load up on debt because it expands the economy, even though it's somewhat artificial. Now, here in the Midwest, I enjoy listening to a broadcaster out of Tennessee by the name of Dave Ramsey. He is the champion of telling people to get out of debt and stay out of debt. All debt, whether it's car loans, revolving debt, student loans, mortgages, you name it, guys. He wants you out of all debt. But there is so much debt out there that I really don't think it's possible for the world to get out of debt and go to a no-debt economy. What do you think, Bill?
It's not possible, because if everybody got out of debt, you're collapsing the credit system, and everything, like what we were talking about, small banks, then we're talking about pensions, everything, and I've said until I'm blue in the face, everything, including distribution to your local store, depends on credit. So yeah, in an individual case, get out of debt. But if everybody did that, it can't be done.
Yeah, not everybody's going to do it anyway.
Yeah. There is an argument for debt if it's not outrageously wild. And the argument for debt is changing
take debt
valuation
on when there
and
is
reset.
no debt outstanding.
Yeah. And
anybody
debt cannot be paid.
Yeah, any time we're in business, we can use debt responsibly, whether it's receivables, whether it's for payables, whether it's for R&D. I mean, there is a reasonable way to use debt, but not the way these knuckleheads have been doing it.
But it's a double-edged sword, Denny. That's the point.
How about this
charges to the upside and is like a trap door to the downside.
Hey, Bill, what would you rather have me do? Borrow against gold and build a mountain of bullion against a modest amount of debt to keep the lights on, or sell as fast as I could mine?
No.
No, well,
I'm just making an argument for debt.
You're talking about borrowing against against the only real money on the planet, and not selling, not trading that real money for fake money. So obviously,
well, that's what the gold industry should do and won't do, but will do.
They're dumber than a bag of hammers, Jim. They
have no idea. They value gold according to the price of what it takes to come out of the ground. If it's there or above, they're in the catbird seat. Sell as fast as you can. If it's there or below, they did a over-the-counter derivative to raise money to open up properties that weren't economic, and boom, down they went.
Well, Jim, it looks to me, and this is the last question of the day, boys, and I'm going to throw it to Jim. It just looks to me like gold is about to assume primacy over everything. I mean, I sort of see it, but mostly I'm just feeling it. It has been suppressed for so long that I just see it, that it's ready to explode to the upside. Dollar as a currency it's the tallest of the pygmies. But gold, you can take it from there, Jim, but I just feel the time is here.
The guy on the side of the road got a sign up that says, "The end of the world's coming." You go past my house, the sign says, "Sorry, guys, it already happened." We are in it now. This is when I expected it to start. Looks to me like it started. And it will follow through. And gold is a tool used as much by the Rothschilds as it might be by people who are trying to build their own central banks. The major winners in gold are always going to be the major European banking families. And the public, by the time they figure it out, in all probability, will not even be able to get it. This is the kahuna, guys. This is the big change. This is in 1968 through March of 1980 was nothing more than a rehearsal. What's coming now is the stage play, and just the people who we think are the greatest enemies of gold are the ones who are going to take gold through 350, through 400, eventually through the old high to a new high.
1350, 1400.
Yeah.
You're back 30 years ago, Jim. 300, 400.
I'm sorry. I get you're talking to Grandpa. Give us a break now. Okay? Little kindness here to the old people.
Be careful what you wish for.
Well, I don't think this is something to be wished for, by the way. It's just something that's going to happen.
Exactly.
But remember, Art Cashin and I may be the oldest living people that were ever members of the New York Stock Exchange. It'll be nice to both of us.
Hey, happy Father's Day, and Grandpa's Day, too, Jimmy.
Thank you so much.
Bill, you got anything else before we say goodbye?
No, I'm done. I'm good.
Uncle Dave?
All set, Danny. I think it was a great talk.
Guys, thanks for letting me hammer on you. And, Dave, you keep those emails coming. Those we used to call them love letters, but you have really kept me on my toes. So I appreciate the emails you guys send me.
Hey, Bill's let the genius out in the last 2 or 3 years. Have you noticed?
Say that again, Jim?
Bill has let us see his genius. Okay?
Oh, Lord.
Before he got covered with this with conspiracy, by the way, which all came true. But lately, Bill, you've been really nailing it. Okay? In common language, easy to understood, some of the most complex economic subjects you can touch. Congratulations.
I hate to agree with you, Jim, but in this case I do. And I think Dave's doing a good job, too. I guess
Dave is terrific. Dave, right now I can't see. I'll be able to see again in July. Do you know what it's like not to be able to read?
I have to tell you something, Jim. When I saw those tankers get attacked or exploded or whatever, I just looked over at my wife and I said, Dave just had a heart attack. I just knew he would have exploded.
What are magnetic landmines doing on the side of a boat? And they forgot the water lines, which you're supposed to blow away if you want it to sink.
Listen, guys, stay out of jail, say your prayers, and we'll see you next week, okay?
I can't wait. Have a great week, everybody.
Have a good week. It's a lot of fun. Bye-bye now.